Welcome back to the Neuro Finance Masterclass. I am absolutely thrilled you're here for day 92 of our 365 Days to Financial Freedom series. Today, we're tackling a subject that literally separates the amateurs from the true strategists. Our theme for this explainer is on-chain analysis, the transparent battlefield.
That's right. Because if you ever felt like the financial markets has somehow rigged against you, or that you're always the absolute last person to know when a major crash or a massive rally is about to happen, well, today is the day that completely changes. We're setting a sharp, tactical tone right from the jump. No more guessing. We are going to learn exactly how to track the market whales in real time.
All right, here is your tactical mission briefing for today. First, the end of asymmetric information. Second, what is on-chain data? Third, the golden rules of inflows and outflows. Fourth, realized cap and dormant whales. And finally, the on-chain blueprint.
Let's kick things off with Section 1, the ends of asymmetric information. To really grasp the power of what we're doing today, we have to start by contrasting the deeply flawed, frankly rigged nature of the past with the absolute clarity of the future we are now building in. In the traditional stock market, large hedge funds and massive institutions, they don't trade like you and I do. They trade in what are known as dark pools. They execute these massive block trades off the primary exchanges, specifically to hide their real moves from retail investors.
Exactly. And by the time that information actually hits the tape, it's way too late for everyday people to react. You are simply exit liquidity for the institutions. But crypto is built on a fundamentally different infrastructure. The blockchain is a decentralized, public, and completely transparent ledger. This means that every single time a billionaire buys, sells, or moves their capital, they leave a permanent, visible digital footprint. They literally cannot hide from us anymore. The playing field has finally been leveled.
Mastering on-chain analysis is basically the superpower that allows you to legally look at the cards of everyone else at the poker table. Just think about that for a second. If you were playing high-stakes poker and could clearly see exactly what your opponents were holding, you'd never lose. An architect, which is our term for a master of neurofinance, doesn't gamble. They never guess what the whales are doing. They use this transparent ledger to audit the other players' chips before making a single move of their own.
Moving right along to Section 2, what is on-chain data? So now that we know we have a secret weapon, we need to define exactly what this raw intelligence actually looks like. On-chain data is simply the raw transaction information pulled directly from the blockchain ledger. This is the unalterable truth of the market. As an architect, you have got to aggressively stop listening to analysts, rumors, or the financial media. They feed you narratives designed specifically to make you emotional, to make you panic sell or FOMO buy. But the blockchain, it feeds you the mathematical truth. We don't listen to what the whales say on television, we watch exactly what they do with their money on the network.
So what specific intelligence are we actually tracking here? Well, we monitor wallet balances to see who's accumulating or distributing. We look at overall transaction volumes to gauge the true network activity behind the daily price action. We track fluctuations in gas fees, which tells us when network demand is spiking in real time. And we monitor smart contract interactions to see where the decentralized finance capital is flowing. And honestly, the best part? We don't have to be computer programmers to see any of this. We use highly accessible, powerful platforms like Glassnode, CryptoQuant, or Arkham Intelligence to monitor the entire global financial nervous system.
All right, Section 3, the golden rules, inflows and outflows. Let's enter the core tactical playbook of today's explainer. If you want to master on-chain metrics without destroying your focus with massive data overload, you need to keep your attention razor sharp on the flow of assets to and from centralized exchanges, like Binance and Coinbase. Getting this right changes everything. First up, exchange inflow. When large whale wallets start moving massive amounts of crypto onto exchanges, it is generally a highly bearish signal. Why? Because smart money keeps their coins in highly secure private wallets. They only go through the effort of moving millions of dollars onto an exchange when they're preparing to sell. It actively increases the available market supply.
Precisely. And conversely, exchange outflow is a massively bullish signal. When millions of dollars are withdrawn out of exchanges and into private cold storage wallets, it means the smart money's done accumulating. They're pulling their assets off the active market and locking them away for the long haul. This drastically reduces the available supply. When demand stays the same, but supply is locked away, the price mathematically has to rise.
And this brings us right back to the central philosophy of the Neurofinance Masterclass. Architects don't guess what the whales are doing, they audit the data on-chain. When you see massive exchange inflows, you don't panic, you prepare. You know a sell-off might be imminent. When you see massive outflows, you recognize the supply shock that is quietly building in the background. You're operating purely on empirical evidence here, maintaining a sharp, tactical mindset at all times.
Time for Section 4, realized cap and dormant whales. Understanding those exchange flows is a fantastic foundation. But understanding the historical weight of the market, that takes you to an elite institutional level. Now, you've probably heard of market cap, which just multiplies the current daily price by the total supply. But advanced architects look at a metric called realized cap. This brilliant indicator values each individual coin based on the price it was at when it last moved on the blockchain. So it totally strips away all that daily chaotic price volatility and reveals the market's true average cost basis. It shows you the actual psychological weight of the capital sitting in the market. And tracking this cost basis allows us to set up major alerts on the battlefield. I want to pose a scenario to you right now. Imagine you're looking at your on-chain dashboard. Suddenly, an old, massive wallet that has been completely dormant for years, a wallet that hasn't moved a single coin since 2011, when Bitcoin was just a few bucks, suddenly wakes up and starts transferring thousands of Bitcoin to a modern exchange. What happens when a dormant whale wakes up? What does that actually mean for us? It means a massive structural shift is occurring on the battlefield. The earliest, smartest money in the entire system is repositioning. These ancient whales, they do not move capital lightly. They have held through multiple devastating bear markets without even flinching. Tracing these old waking wallets is exactly how you spot massive macro cycle shifts before the rest of the retail market even has a clue what's going on. When the dormant giants wake up, the architect doesn't just watch, they prepare for a whole new phase of the cycle. Which brings us to our final section, the on-chain blueprint. We have covered incredible ground today, exposing dark pools and learning to track the waking giants of 2011. But theory is totally useless without execution. So here is your deployment blueprint for today. Step 1. Open a free on-chain data tracking site right now, platforms like Etherscan, Glassnode, or CryptoQuant. Step 2, search for the current exchange net flow chart. Look specifically at the balance of those inflows versus outflows we discussed. See if the supply is moving onto exchanges to be sold or off exchanges to be held. And step 3, train your mind to read the ledger. I want you to stop treating the market like a chaotic casino of red and green price candles. Stop being surprised by sudden market crashes when the on-chain data was literally warning you days in advance.
Knowing that this data is freely available to you right now, will you continue guessing in the dark like a traditional retail trader? Or will you step into the light, read the transparent ledger, and rule the cycle? The choice is entirely yours. Get onto the ledger, start auditing the data, and take absolute control of your financial future.
Thank you for joining us for Day 92. We'll see you right back here for our next Masterclass Explainer. Keep analyzing and stay sharp.